If there isn't discipline, how can there be a true realization of an ideal? Miyamoto Musashi. And what the Swordmaster teaches us here is how important discipline is. That we can't realize the essence of a thing if we don't discipline ourselves every day, in our case, to study it. And for us, it is price movement. Price movement alone. It's not tuning into CNBC, watching the talking heads on Bloomberg, whatever it might be. It's following price, understanding the ebbs and flows of greed and fear as they make their way through the market. How do you see that? You see it on a chart like we are looking at now. Those of you tuning in on our podcast, I'll tell you what we see as we go through the charts. We have a special training for all of our subscribers today on complexity theory. It's so beautiful. I love complexity theory. I love studying it. My background is not in higher mathematics, although one of my graduate degrees I took some more advanced math, but nothing like you engineers out there and scientists that I know are part of our family. But I love one of the quotes I took from the book I read that I talk about in the training and the way I relate it to the stock market. But it's about memory and feedback loops and how the market is continually dynamic. And it is because of the memory of the people that are involved in the market and the feedback loops we have. That is why it is complex. That is why it's always changing. That is why we have to be in it constantly in order to understand it. We have to discipline ourselves so that we can obtain a realization of the ideal, which is following price movement. Enough of the esoteric. Let's jump into these charts. Everything up for the day, save 20-year bonds, which is good because we're in a down play on bonds. Now, let's see what we have going on. We see the S&P 500 up 0.65% for the day, ending the week. What do we have as far as the weekly chart goes? We've got a big green up candle, higher highs, price percent oscillator ticking up, derivative oscillator moving up. Great. 2-day chart. When was our jumping in point? Well, for the last 2-day recross, it was back somewhere at the 326.50 mark, reaching a high. How high did we go? 350.72. Quite beautiful. We see the price percent oscillator moving up, derivative oscillator moving up, price above the 2-day and the weekly. Now, caveat here, this is just the first day of the latest 2-day candle, so it will finish drawing on Monday. Well, look at that. Look at that half-day chart, moving up day after day after day like stair steps. Quite nice to see. And the price percent oscillator moving up. Derivative oscillator did peak when the market really popped on, when was that? Thursday morning, the 27th. And then pulled back some in the afternoon and then started moving up on Friday. So that's good to see. Just what we want to see. And a successful 2-day recross still in the making. Beautiful. Let's look at the Qs. The NASDAQ 100. We're in a 2-day recross there also. Not as long as the S&P 500. But look at the price percent oscillator moving up. Derivative oscillator. Price well above the weekly trend line. Bigger candle. Higher high. Beautiful 2-day. What do we see there now? Interesting to note, the prior 2-day, Wednesday and Thursday, we hit a high of 293.85. The latest high here, 293.18. So didn't hit quite as high a high on the first day of this latest 2-day candle. But it was an up day, up 0.51%. We see the price percent oscillator still moving up. Derivative oscillator gaining upward momentum. Price well above the 2-day trend line. Half-day chart. That's where we see the peak that was hit on Thursday morning. And then a sideways slide, but building. Price percent oscillator is flat. Keep your eye on that as we get into the new week. Just watch that, but pretend that's just the half-day chart. But in particular, keep your eye on the price, that 2-day chart, which is still looking good, and the weekly, which is looking particularly good. So we'll continue to see how much longer this market will move up. And again, I don't know if you can believe this is happening. I can't really believe it's happening in the middle of a pandemic with millions of Americans not working and stores closing and all the things that are going on. But my friends, we just follow the charts, don't we? Don't ask too many questions. follow the charts. And again, if you're a value investor, yes, ask all the questions you want to. Value investing is great. Do that time and time and time again. But regardless of whatever kind of investor you are, nobody needs to pay a higher price than they should pay or sell at the wrong time. That's why we want you to practice trade with us. Figure out how to read these charts. Use them to your advantage. Okay, we're going to leave stocks now. Go to bonds. Bonds down for the day, 0.07%. Look at that down movement. It is beautiful. Why? Because our price percent oscillator is negative, moving away from the signal line on the price percent oscillator, derivative oscillator, gaining lots of downward momentum, hitting a lower low. Look at the 2-day chart. We had that 2-day crossover back on the 11th of August. And what did we see happen? We had 4 days of strong down movement, slid sideways and up a little bit, and then dropping over the last 3 days, which is beautiful. Price percent oscillator heading down. Derivative oscillator gaining some downward momentum. Half-day chart. Look at that nice stair step down to the basement. Keeps on a moving down. The jumping in point for our down move somewhere around the 268.50 mark to a low. I said 260. Sorry, 168 mark, down to a low of 160.64. So 168.50 or thereabouts, down to 160.64. That's beautiful, my friends. Now you might say, for those of you who are new to what we do, what is that about? How can you possibly, why would you be doing any kind of practice trade on a downtrending market? As I showed you guys yesterday, Tango, Bravo, Foxtrot. Oops, putting that in wrong. Tango, Bravo, Foxtrot. That is the ProShares 20-year short fund. Look what it's been doing. Moving up. It's been doing the opposite of what you see on TLT. Why? Because that's an inverse fund. You want to know more about inverse funds? Take our study on inverse ETFs. How to make successful practice trades when the market crashes. I'm going to put that at the end of today's video. Want you to have it, study it. And again, go sign up at chartingwealth.com so that you can get our daily trainings as they come out every single day. We've got them. We recycle some of them. We put out new ones all the time. And if you would like our 3-part Options Made Simple, you gotta go and subscribe to us as a Patreon supporter, as little as $1 a day. We'll get you into those special trainings as well as our short chart training, Bitcoin training, long chart training, and of course our once a month call and answer session, which is coming up at the beginning of September. We are here for you. Want you to have it. Follow the link to the Patreon support. Now, lastly, we go to gold. Gold up for the day beautifully, 1.74%. Gold is still positive, we see. It had been heading down, but it's flattened out with that up movement as far as the price percent oscillator goes. Derivative oscillator still losing momentum. We see for the week a red down candle, a spinning top. Lots of wick on the bottom with downward pressure, little wick on the top. Go to the 2-day. What are we waiting for on the 2-day? Hoping with this latest up move surging up on Friday, maybe we'll have over the course of the next week, mark your weekly market worksheets, maybe we'll have a crossover going up. Wouldn't that be beautiful? It would be. We'll wait and see if indeed that occurs. And we can see where that latest price is pushed through the 2-day trend line. Now, we're not calling it that yet because it could be a down day on Monday and that could evaporate. That 2-day candle will finish drawing on Monday. Go to the half-day chart. What do we see there? We saw where gold came down, slid sideways, starting on about the 25th, moving up a little bit, still plumbing around there, and then started taking off in the morning and the afternoon on Friday. Crossed over going up even, first time in a while. Tried to, back on a kick up on Wednesday afternoon, but just couldn't do it on Thursday, and then popped over Friday morning. So there's hope. Also saw price move above the 2-day trend line on the 4-hour chart, which is decent. We'll wait and see if we're going to have a 2-day recross next week. Watch, mark your charts for that, see if that occurs. Folks, that's where we are as we end the day. We so appreciate you being with us, not just today, but all week. Again, if you can't join us every day, I'm asking, what else are you doing that is so important that you can't find 10 to 15 minutes? If you care about this stuff, you gotta spend the time at it. If you don't, on a daily basis, you're not going to get the nuances. You're not going to understand this. You're not going to figure it out. And if you think, my friends, that you can go find some special little key, some little pot at the end of the rainbow that you can cash in on, some little secret, that tip that somebody's going to give you as to how to master the markets, it comes from your diligent study, your practice trading, your hard work. Again, you got to put in the effort. How do you get to Carnegie Hall? Practice. How do you become a good trader? Practice. We're here every day for you, and we don't charge you a penny. If you want to support us, that's great. We appreciate it. If you want to buy our book, that's great. Charting Your Way to Wealth to help supercharge your training, great. But my friends, it takes your effort 10 to 15 minutes a day. God bless. All the best from the whole team here at Charting Wealth World Headquarters.